The Australian Financial Review.
Hello, I'm James Thompson, Chanticleer columnist at the AFR. Welcome to our weekly news breakdown of all things business, finance and markets. With me today, as always, is the senior Chanticleer columnist at the AFR, Tony Boyd. Tony, how are you?
Good, thanks, James. And gee, it's great to be back after the summer break.
Yes, it's great to be back. Well, we've got a great show for you today. We're going to look at whether the world's central banks are finally ready to stop lifting interest rates. We'll ask whether the Virgin Australia float can fly. And we'll look ahead to earnings season in the US and the return of Parliament. But first, Tony, I think we need to address the elephant-sized chicken in the room. You've decided to retire from the chook pen after 13 years as a senior Chanticleer columnist at the Financial Review and, can I say, Australia's top business columnist. Now, I've got to quickly say, reassure our audience that they'll be still reading you in the Fin and hearing your dulcet tones on the Chanticleer podcast right up until the end of March. But I wonder if you might share with us some of a little bit of the response you've had to your news in the last few weeks.
Well, James, I've been overwhelmed actually with the text messages, the emails, the phone calls. I mean, there's CEOs, company chairs, directors. I even got a poem? From one of my contacts who it was written by ChatGPT.
Right.
So it's pretty ordinary, but it does have my name in it. But no, it's nice when people ring you up and say that they think you've made a contribution to the business world or at least to public debate in Australia. But I must say some of the most interesting messages or memorable ones came from people I didn't even know.
Right.
And they were readers of the Financial Review. One in particular, a former financial planner up in Queensland who he said he made a deliberate decision, I'm not going to sell my business to a big institution and I'm going to cultivate the younger people to take over this business, and that's what happened. So he then tried to use that as an analogy of fantastic succession planning. James Thompson and Anthony McDonald running the Chanticleer column, and so I thought that was pretty good.
Yeah, that's lovely, Tony. No buyer's remorse at this stage?
No, when someone compares you to Ash Barty going out at the top of your game, I don't think it gets any better than that.
Oh, well said.
That's probably a bit over the top.
No.
I was never any good at tennis.
No, it's much deserved. Well, Tony, we are really looking forward to hearing you over the next couple of months and introducing Anthony McDonald to the Chanticleer podcast later in the year as well. We should get down to a bit of business, and you're still cranking out great columns, and one that really captured readers' attention this week was on how Microsoft and Salesforce are in the midst of big global job cuts, and that's reached the shores of Australia. Tell us a little bit about how they're doing this, Tony.
Well, basically, I heard from one of my contacts that they'd been sacked these companies, Salesforce and Facebook, had been sacking people by email, and I thought it was definitely worth looking into this because there's hundreds of thousands of jobs. Well, probably at least 100,000, probably more jobs have gone from technology companies just in the last 2 months. And when I looked into it, I found that this was true. And it's quite brutal. It is, in fact, illegal to sack people without warning in Australia and the UK, but I discovered that what would happen is a person who'd been targeted by the company to leave was sent an email saying that your consultation process will start today and your position is uncertain. You may not have a role in the future.
Right.
This was really a way of, I suppose, getting the fine line between breaking the law and pushing the boundaries of getting rid of people as quickly as possible. So,
presumably, Tony, that consultation's fairly short.
Yeah, look, for some people it depended where you were. You can remain at the company for some time, but the worst part about this whole thing was a lot of the managers in the companies didn't know who'd received the emails.
Right.
So people who are in the office already feeling isolated and unwanted were not able to really get counsel or advice from their bosses because they weren't even told either.
Yeah. It's pretty brutal, Tony, and it comes against the backdrop of tech layoffs, as you said, right across the sector. Why are the tech companies cutting so hard? I mean, this was it doesn't feel that long since, we were crying out for tech people, tech staff right around the world, and yet here they are cutting. I mean, is this a sign of a slowing economy and higher interest rates and falling tech stock prices?
Look, I think it's all of that, as well as them being very poor at estimating the forward orders and just going for growth, going madly for growth. And Mark Benioff, the CEO and co-founder of Salesforce, actually said in a note to staff that, he got it wrong. They just kept employing people all through 2022 and not expecting the outcomes that occurred with the rise in interest rates and the fall in, I suppose, the cautiousness of corporates around the world, I think, including in Australia. So I think for some of these companies, they'd never done it before, and that's possibly an explanation for why they handled it so badly. This was new for them, and that may be the excuse.
Yeah.
So, James, the one of the world's biggest technology companies, Apple, has just released its results overnight. What did you make of that?
Well, yes, Tony, the Apple results were a bit disappointing. They missed on revenue and profit expectations. Revenue actually fell 5%, which was the biggest quarterly revenue drop since 2016. I should also point out there was a pretty big morning for tech generally. We had December quarter results for Amazon and for Alphabet, which owns Google and YouTube, and also for Australia's very own Atlassian. And I've got to say, a bit like Apple's results, all of these other companies are a bit disappointing too. I guess it just goes to show that, yes, tech stocks have been surging since the start of the year, and that's great for investors. But what's happening at tech companies is that life's getting a little bit tougher. What we're seeing is higher interest rates are sort of doing their job and slowing the economy down, and that means companies are tightening their belts, and tech spending is generally slower. So it's a trend that we're going to have to watch as we enter Australia's reporting season as well. All right, Tony, well, let's get down to our first main topic of the week. And while US earnings season is certainly big news, the truly big market-moving moment of the week came when the US Central Bank, the Federal Reserve, raised interest rates on Thursday morning Australian time by 0.25% to 4.75%. Now, that rate rise was widely expected, but it also had been expected that the Fed chairman, Jerome Powell, would remain very hawkish. That is, he would warn about how worried the Fed was about inflation and how determined they were to keep interest rates higher for longer. Now, Powell was hawkish, but not nearly as hawkish as the market expected, and stocks took off on Thursday morning, setting off a sort of global equity run that, adds to this rally that we've seen right across January, Tony. I thought we were coming into a recession, and here we are, the stock market surging. How much does this depend on the idea that central banks, including the Federal Reserve, are pretty close to the end of their rate hiking cycle?
Yeah, I think you're right. I think we are getting very close to the end of this process, with the Federal Reserve probably going to go to about 5% at the upper limit of its range. Then there's really only one more rate hike to go.
Yeah, that's right.
So that's probably buoyed all of the markets, and we can talk about whether or not people have overestimated how good things are going to be in America. But should we now start talking about a soft landing? What do you think? Well,
I think we have to. I mean, it's always felt a bit Goldilocks, this idea to me that inflation has peaked and it would fall. Central banks would finish their rate hiking cycles in the first part of this year and then might be even cutting interest rates by the end of 2023. But that is clearly what markets are rallying on. Markets believe that, we're going to be returning to a sort of quote unquote normal version of monetary policy pretty quickly, and that any recession or slowdown that we're going to have is very shallow. The ASX 200 and the S&P 500 on Wall Street are up 8% since the start of the year. The Nasdaq, which is of course the tech-heavy index in the US, that's up 14%. Tony, does this feel reasonable to you? Can this rally keep running, or is it a bit overdone?
Well, it's priced for perfection, I think, James. We've got the nirvana scenario, it seems, is playing out with a soft landing in the United States inflation coming down, earnings are not going to be impacted too much from higher interest rates, and then we've got a smooth runway to growth into 2024. I'm a little bit wary. There's anything could upset that sort of scenario, and markets could suddenly have a big fall. But at this point, it looks like things are pretty good, and Australia, relative to the rest of the world, looks really good.
Yeah, that is true. That is true. So what do you think this rate rise in the US means for the Reserve Bank, which is going to make its decision on interest rates next Tuesday? The market's pricing in a 0.25% increase there too. Do you think they've got it right? Or does the Fed's action and the reaction from the market change the equation for the RBA at all?
Well, I think Philip Lowe gave a really interesting speech last year at the Annika Foundation, and in hindsight, that was actually he was ahead of the curve. He started to talk about rate rises didn't need to be as aggressive, and I suppose the considerations we have to have about where the RBA is going to go is that Australia's always got to be very careful to track the Fed. We don't want to get too far behind them. But another 25 basis point rate hikes in Australia would take us to 3.6. That's a little way off the top estimates of 5 by the Fed in America, but it's probably close enough, especially considering the US dollar's coming under a lot of pressure lately. The other thing I suppose we've got to think about is our official cash rate has a much greater impact on the economy because of the number of people on variable rate loans, or those coming off fixed. Yep. So whatever the RBA does is probably going to have a bigger pound for their dollar or whatever, or bang for their buck.
Yeah. Well, that's certainly true. I mean, in the US, the market's dominated by fixed-term loans. So the transmission effect, the lag effect between the Fed raising rates and it starting to hit households is a bit longer. Tony, there's no chance we could see inflation creep back up again and cause a fresh headache for central banks, is there? I mean, we've got China reopening. We've got still pretty strong numbers coming out of the employment market. You know, unemployment has not moved. We've still got some good wage growth, and, you know, retailers like JB Hi-Fi and Myer and Super Retail Group, they're still reporting good sales numbers too. I mean, is the consumer really as badly off as some people suggest?
Yeah, look, I think it's easy to forget how much Australian consumers, and for that matter American consumers, built up in terms of cash balances during COVID. And I think what the savings rate here got to 20%, I think there's still a pretty good strong buffer here. In America, I think consumers had 3 to 5 times their normal cash balances, and that's probably a lot of that is still sitting there. So, yeah, consumers are probably more resilient than we expected. The question now is, how long do these rate rises, which go to a higher level of official interest rates, stay in place? And that's, I think, the short end of the curve in America is saying that there's going to be rate cuts by the end of the year. Do you agree with that type of market forecasting?
Oh, I can't see that. No, I mean, I think my prediction would be 2 more rate hikes at the Fed. I think the next meetings are March and May, so I can see 2 more rate hikes there. I think the RBA will hike next week, but I'm not sure about beyond that. I'm not sure whether they're one and then they pause, or whether they hike twice and then they pause. That's still up in the air for me. Where do you sit? What's the outlook for the Fed and the RBA for the rest of the year?
I think 2 more 25 basis point increases in the United States in successive months. I think in Australia, you're right. I think there will be a pause, and then maybe another one the month after, and then another pause. But to be honest, it'll be all driven by the data. They've got to see what's happening, and that's the sensible option. I mean, as one fund manager said to me this week, why on earth would you want to cause a recession that would then require rate cuts?
Yes.
Let's just sail through this with a soft landing, which looks like about 1.6% GDP growth.
Yep. The soft landing is on. Well, Tony, Let's move to our second topic, and that market rally is starting to inspire a little bit of deal making. The big deal, the big IPO or float that we've seen hit the runway is the float of Virgin, which is rapidly heading towards a return to becoming a listed company less than 2 years after collapsing at the start of the pandemic. Tony, this is an incredible comeback. What have we learnt so far about the Virgin IPO?
Well, we know that they're like a bull at a gate down there at Virgin. I mean, they want to get it. We've had two briefings given to staff or letters sent to staff about the IPO. We've had a complete restructure of the Virgin management to manage the IPO process. There's bankers have been given, request for tenders, and they've pitching, I think, this week. That's Goldman Sachs, UBS, Morgan Stanley, Jefferies, and I think Barrenjoey are in the slot for that. Anyone who worked for Qantas was blackbanned. So, there's this tremendous sort of momentum building up inside the company. And they even said that they earned $2.5 billion in revenue in the 6 months to December at a profit margin of about 5%, which I worked out from data analysis is the highest profit margin since 2007.
Wow.
So this thing is... I think, look, most private equity sell out after 3 to 5 years. This is a very rapid turnaround. I mean, but it's all about the airfares, isn't it, James? Are we all being squeezed?
Well, I think it is about the return of airline stocks and the return of the world to travel after the pandemic. I mean, we have seen airline stocks around the world move up. Obviously, Qantas is up sort of 40%. Off its lows last year, and it's a similar story in the US. So you can understand Virgin's private equity owner, Bain Capital, looking at that and go, hey, it's time for us to start thinking about this. And you can understand why investors will be interested. I mean, you've got a business that has been totally restructured, that sort of shed its poor contracts, shed a lot of cost, slimmed down its fleet and streamlined its fleet, so it's in a better position to make a better go of it this time around. Oh, Tony, do you think investors will embrace this? I mean, investing in airlines has been a difficult one for fund managers over the years. Some fund managers just don't want anything to do with that sector. Others are more willing to have a crack. How do you think Virgin will be embraced?
Well, anyone who put a bet on Webjet, Qantas, and Flight Centre in November last year is looking very good at the moment. So those people who sort of got ahead of the game, and I think this is part of the problem, that there will be a strong run-up probably in Qantas's shares before this IPO occurs. So that all of the potential, I suppose, capital gains that could have gone to the Virgin shareholders had it been listed now will go to Bain and Company. So the question is, how much are they willing to give away to investors to, I suppose you'd say, leave on the table for people who invest in it? And the other thing is, I'd be very wary of how they actually generate the demand. If Bain only sells about 30% of the company or less,
yep.
and these lead managers are very good at drumming up local and international institutional support, and then they hand a few crumbs to the retail investors, you might find there's this massive squeeze on, we want some Virgin shares.
Yeah.
And then it all sort of falls in a heap when it's listed. So they've got to be really careful how they manage this one. I mean, I'm reminded of the last really big float that I thought was a fantastic success that was all about financial engineering was Telstra T3. And what they did was they sort of ramped up the dividend by giving you a sort of extra amount of payout if you got in early. So who knows what tricks the bankers will come up with to make this one go.
Well, one of the big floats that I'm reminded of that I reckon, I wonder if there'll be echoes is Latitude Financial, which came to market a few times, once unsuccessfully, when investors got they were a little bit sort of excited about the size of the shareholding that Ahmed Fahour, the CEO, was going to get. Do you think the shareholding that Virgin CEO Jane Herdlicker emerges from this float with might cause a little bit of controversy or consternation as well?
Well, those prospectuses are really lifting the veil, aren't they, on the company? And that's the sort of disclosure we'll get. But I sort of think if Alan Joyce can get 23 million in 1 year for a turnaround, and she's basically turned around an entire airline that was basically insolvent with $6 billion in debt. Mind you, those debts were wiped out through the insolvency. Then she probably deserves more than that.
Maybe. One to watch. All right. A question for you here, Tony. Virgin and Qantas clearly creaming at the moment. Big profits, big revenue. Will any of this be passed on to the travelling public? Will consumers get a sort of slice of this largesse in the form of lower fares at any stage?
No. I mean, there is no incentive for Qantas or Virgin to cut the price of their tickets, given the capacity.
The demand.
I mean, just think about the Chinese travellers. They made 155 million outbound trips in 2019. That's pre-COVID. The gates are open from China. I think there's 4 or 5 airlines were coming here. An analysis shows that Chinese tourists spend more when they're in Australia than any other nationality in the world. So just think about that. Think about the immigration going to 170,000. Think about the 50,000 Chinese students who are told they can't get a degree unless they actually attend a physical university like in Australia. So there's just so many factors that say those profits in the aviation industry might actually be going into the greatest purple patch since the Wright brothers or launched the first airline, if they were the ones who did it.
I know you're the senior Chanticleer columnist, Tony, but surely you weren't around when the Wright brothers were doing their thing.
No, I did miss that.
Okay, well, we'll be back after the break where we're going to look at the big job numbers that are coming out next week that could shape markets. Earnings season in the US continues and Parliament's back. I've got a question for you about the Treasurer's big manifesto. Well, welcome back, Tony, and we should say as we come back out of the break, how exciting is it to have a new theme song for the Chanticleer podcast, which has been composed...
Yes, I think our co-producer Alex Gow has done a brilliant job on this, and I was listening to it the other morning and just thought, wow, yeah, I'm so happy to be associated with that sound.
What a talent. Sounds fantastic. Thank you, Alex. Big week coming up. It sort of starts on Friday night after the Australian market closes. We've got a important piece of data. As we said earlier, it's all about the labour market in the US. Does it provide the Fed with a bit of wriggle room? And on Friday night, we're going to get job numbers. Tony, the strange thing here is the Fed needs to see unemployment lift. It needs to see a little bit of pain in the employment market for it to be satisfied that it can turn the tap off rate rises.
Yeah, that's right. And perhaps we won't be seeing all of the job cuts by the big technology companies in these numbers. I think the US job numbers are tipped to lift, aren't they, by 185,000?
Yeah.
So it's perhaps a little early to judge whether or not all of the cutting that's been going on will be in the minds of the Federal Reserve when they next consider the data.
Well, we've got cutting in the tech sector, but in Middle America, we're actually seeing manufacturing job openings increase. Job openings went up in America, and there's now 1.9 vacant jobs for every unemployed person. So the pressure on the job market is not waning, and this adds to the question about whether the Fed's tightened enough. But those job numbers will be keenly watched by the market and see whether this rally can continue. Earnings season also goes on in the US. Next week, we've got the likes of Brookfield, Yum Brands, which owns KFC in the US, Disney, Uber, PayPal, Pinterest, and Zoom. We're getting a big look at the US economy here, Tony. The earnings have been okay without being spectacular. Profit margins are holding up. Is there much here to worry investors, or are they looking past these at the moment?
Well, look, I'm not that close to a lot of those companies, but and that's why I'll be interested to see whether you do a column based on, Michael Hartnett, the Uber bear at Bank of America. Is he that the other people are the strategist at Morgan Stanley, Mike Wilson, also pretty bearish. It's just going to be very interesting what those guys say about earnings in the corporate sector in America and whether or not the bullishness that's already in the prices can be justified, because they're pretty influential people. Yeah.
Another one, we don't talk too much about Parliament going back sitting, Tony, but the first sitting weeks of the year come up next week, and it's been a big week for Jim Chalmers, the Treasurer, who's published a sort of 6,000-word manifesto, that's what it's sort of been called, about his view of the economy and how the economy should grow and how capitalism should change. What have you made of this this debate around Chalmers' manifesto?
Well, we published in the Financial Review a 1,300-word extract, and then I thought it was interesting. The editor-in-chief, Michael Stutchbury, wrote a 2,000-word rebuttal. So it's certainly created a lot of discussion among economists, and you may have seen there's a number of people landing on either side of the debate. But personally, when I read it immediately took me back to an interview I did with Michael Porter from Harvard Business School 10 years ago. Now, this is getting back a long time in history, James. I'd only been in the Chanticleer job a couple of years, but he basically was at the vanguard of what's called shared values. And basically he was advising corporate America, and they loved it because what it was is that you act in the interest of society and you actually make higher profits. And I thought it was quite an interesting analogy that Jim Chalmers seemed to be drawing on that type of approach. And the practicality of it is, say, a company that was wasting water starts saving water, a company that was creating, thousands of tons of rubbish and having to pay for it to be disposed of suddenly gets involved in recycling. I mean, there's all sorts of different things. A huge electricity bills reduced by solar panels on the roof. So there was this sort of cooperative approach to business, and it involved government as well from this shared values philosophy. So that's the thing that I sort of thought of when I read the Jim Chalmers treatise. But obviously, when he gets back into Parliament, he's probably really going to cop it from Peter Dutton, don't you think?
Oh, I think so. I mean, I think there'll be it's good to raise these big picture ideas. I think that's good, but I wonder if next week the Treasurer might be accused of sort of thinking about the very big picture and failing to think enough about the smaller, more shorter-term picture on cost of living increases and energy and that sort of thing. I wonder if that'll be the accusation thrown at him. I think it's interesting to have this debate out there, and I think this Labor government has been good about setting out big picture ideas and letting them be tossed around and letting people have a shot at them and discuss them, and that's healthy. That's good stuff. So. But, Tony, you've done a lot of budgets during your time as the Chanticleer columnist. Do you think we'll see anything out of the Chalmers essay sort of manifest on budget night in May?
Well, last budget we saw this social housing policy, which had been preceded by a meeting actually organised by the Financial Review and Anthony Pratt down in the city with Paul Keating and the heads of a lot of the big super funds and the banks. And that was all about cooperation between government, business, and the big owners of, I suppose you'd say, private capital in Australia. There's $3.3 trillion in the super industry. So I think there'll be more of that. It's just a question of, can he, before the budget comes out in May, get business on board with other projects that allow the guaranteeing of returns, commercial returns.
Yeah, the commercial returns is the sticky part, isn't it? That's the bit, even with the social housing proposal, that the banks and the super funds are still working through. What do they look like? How do we sort of make this stack up for members from a financial point of view as well as from a social equity type point of view? All right, Tony, we love getting questions here at the Chanticleer podcast. You can email yours in, chanticleer@afr.com. Ask us anything, particularly make curly questions for Tony. But we've got an easy one for you to start us off for the year, Tony. Michael of Baldwin in Melbourne says, Happy New Year, Tony and James. What sector of the market will you be watching most closely in 2023 and why? Tony, you go first.
Okay, well, look, I'm this is maybe not directly answering the question. I feel like a politician, but I'm going to say anything China exposed. This turnaround that's happening in China and what it means for the world is very important, and it's more important for Asia and our region than any other part of the world because we're so interconnected. So China exposed is resources, education, travel and tourism. And you can go through the list on the ASX and you'll find a lot of very interesting companies in those sectors which probably have quite a way to run, because one thing that we all got wrong last year was all about China and its growth in 2023. And we might find that it's going to be a lot stronger than people expect.
Yeah, great call. I'm going to go for retail. This week we saw retail sales come out a lot weaker than economists expected, but we've seen some really bullish updates from the likes of JB Hi-Fi and Myer and Super Retail Group have all said that their sales are pretty good. So I think when we're trying to figure out what's happening to the consumer in Australia, how hard are those interest rates hitting, we really need to watch what's happening with the retailers' results. At the moment, they're pretty good, but they're probably close to peaking, and I think the second half is going to be quite telling. So watch the retail sector over the course of the year to get a sense of how the real economy is travelling. Well, Tony, it's great to be back after our summer break, and very both sad to hear your retirement news and excited for what your next chapter holds. But plenty more Tony Boyd over the next few months, so you're not going anywhere, are you, Tony?
No, I'm not. No, thanks, James. It'll be great to get Anthony McDonald on the show so he can share his insights learned over 12 years on Street Talk.
Absolutely. Well, if you like the podcast and you want to hear more, consider rating and reviewing us, as it helps others find us. And follow us on Spotify or Apple or wherever you get your podcasts. At The Financial Review, we investigate the big stories about markets, business and power. For more, go to afr.com and you can subscribe to The Financial Review, the daily habit of successful people, at afr.com/subscribe. Chanticleer was hosted by me, James Thompson, and Tony Boyd. The producers are Lap Fan and Alex Gow. Our theme music is by Alex Gow. See you next week.
The Australian Financial Review.